Hey everyone, welcome back to Options Paycheck Live. I'm back with my real interactive brokers account, planning my option trades for Monday's market open. No simulations, no paper trades. Everything you see is from my live portfolio. My goal with this strategy is clear: to consistently outperform the market. And I have been doing exactly that. I'm solving the problem most investors face: how to beat the index without taking reckless risks. And I do it with a strategy that's simple, repeatable, and grounded in fundamentals. Here is how it works. I sell cash secured puts on high quality companies, especially when I see the price heading lower. I use technical indicators like RSI to time my entries, typically when a stock is oversold. I look for undervalued opportunities with the potential to 5 times or even 10 times over the next few years. When I buy stocks, I immediately turn it into a cash flow machine by selling covered calls. Far enough out of the money so the stock stays in my portfolio. This approach gives me weekly income from selling options, long-term exposure to great companies, and a system that's consistently beating the broader market. Today, I will walk you through my real results from last week, the exact puts I'm selling this week, the covered calls I'm placing, and you will see my trades in Interactive Broker account. If you are new here, welcome. I focus on selling options as a tool to generate a reliable second income while building long-term wealth. I have been documenting my progress every week since April 2025, so you can see the strategy evolve and track the results yourself. So, if that sounds helpful, smash the like button and subscribe so you don't miss the next chapter in this journey. Let's dive in. Now you can see my portfolio, my holdings, but I go to portfolio dashboard and I will show you the performance from the last week. Last week, premium $1,806. This is what I collected last week. It was exceptional week. It was really great. If you remember past weeks, sometimes it was 500, 400, even close to 300. This week, $1,806. Overall, since April 2025, I collected $5,583, which is annualized return on investment just from premiums 33%. Overview of trades and portfolio from the last week. So the most money on premiums I did was on covered calls from Tesla and also from some puts. I just on Tesla I earned $1,416. On Nvidia I did quite nicely as well. I earned $112 from puts, and from Gamestop I got $277 on calls. If we go to the portfolio performance, last week my portfolio overall grew 2.5%, which means that overall portfolio performance is 130% since April 2025. And as my target is to beat the market, beat the index, so S&P 500 did 117% or 17%, right? Since April 2025, and Nasdaq did 124% or 24% since April 2025. So you can see I'm beating S&P 500 and I'm beating Nasdaq as well. Portfolio allocation. This has changed since last week. So I have over 30,000 in Tesla, a little bit more than 100 shares. I am still waiting for enter to Nvidia. So I have small position as of now, but I'm going to sell puts. In Gamestop, I increased my position after the drop in the result, or after quarterly results last week. So I entered actually more. I increased the position, and the reason is because the portfolio, the premium is way higher than what I can achieve from other stocks, and for that I'm long in Gamestop. Small positions still in Cleveland Cliffs, ClearSign Technologies, and Google, and I have 31,000 in cash. So what it means for the positions and for what I'm going to plan and open next week. Regarding positions, I have $100 shares in Tesla, which means we will be selling covered calls. Gamestop, 1,400 shares, again ideal for covered calls. And for Nvidia, I will be selling puts, and we will go to the charts, to the details. So my trades that are open and that I plan for market open on Monday are following. And let's focus first on Nvidia. I opened the put with the strike price of $130. You know what? One thing actually that I want to show you regarding performance before we deep dive to the new trades. I want to show you actually the performance in detail and what has happened actually last week, because I think it's very interesting to see why I earned so much money on Tesla on premium. And you can see actually that I was selling covered calls for $345, but as I had a cash position as well, I was selling also the puts. And as the price was growing, right? So this is annoying. So as the price was actually going, starting from Monday, right? So open at 285, but then day was closed at 307. So I was able to roll the options, and so for puts that I open at $285, I actually rolled it to up and to the same week still. So to strike price $292, and I earned additional $265 on premium. And then later on, actually, I closed the puts with small loss of $5, and I used the cash actually to buy the dip from Gamestop. And on Gamestop, it was similar. I was also rolling options, but in the case of Gamestop, it was a different direction, right? So I opened the calls at $38. And as the price was falling, I was going down with the premium, rolling the options down, the strike price down to $32 and then even to $26. And so I earned overall $48 as I was earning or rolling the options and the price. And then I also opened covered calls. When I had a position, I opened covered calls with the strike prices at $24.50 and collected premium of $228. For Nvidia, I had only one option contract, 138 strike price. It was put and earned $112. For Cleveland Cliffs, it was only planned. It didn't open with the strike price $9 and premium that I requested of $3. All right, so now we can go to the planning, and so you can see that I have open positions or planned orders for Gamestop and Nvidia, Tesla, and Cleveland Cliffs, and Clear Sign Technologies, which is from the past week. It's the experiment I'm doing. I don't expect actually Clear Sign Technologies to be open because the strike price is $5, and the price currently is maybe $0.50. So this is just an experiment. If I keep it open, if maybe someone buys the options, but I don't think so. So then for GameStop, I opened put, and the put is for $18. So let's have a look on the chart, on details, and I will actually copy this yellow line, because this yellow line usually indicates strike prices, right? So I have puts with the strike price of $18, right? And so I will be, my expectation of the price is basically it will be moving mostly sideways. Might still drop a little. There is this support at 20, right? So it might be moving somewhere between 20 and 23. So the previous, as it is always, right? So the previous support lines are here in green, and the resistance in red. Actually, the previous supports will now work as a resistance. So I will change the green colors to red colors, so that we know that now it works as a resistance. So we have few levels here, and now we are with the price of $22, and as I expect basically the price moving within this range. So if the price drops even more, I will be buying dip and buy more shares for $18 strike price. Talking about GameStop, I also opened covered calls for 26 with the strike price of $26, and it's basically visualized here, right? So it's slightly above the resistance. Actually, it would need to push through two resistance levels to be in the money and get executed. I want to talk a little bit more why I actually entered the position. So there are two reasons, right? So one is I'm looking for companies that have good chance of 2 times, 5 times, 10 times in couple of years. For GameStop, I think with the cash they are having, with the recent or with the transformation Ryan Cohen is doing, and what they are doing in terms of really like finding good products to sell and refocusing from physical computer games to collectibles. I think it's really nice strategy. The margin seems to be very good, and even though the revenue is dropping, the earnings are going up because the margins are better. They are closing unprofitable shops, and so they are really positions for growth. And also Ryan Cohen is now looking at the Bitcoin strategy, right? So they have plenty of cash. I think with all the with all the offerings they did, and also with having additional cash, borrowed cash. They have almost 10 billions in cash. So the valuation of the company is the same as cash, and I believe that this management can actually invest the money very well. So they are on the good path actually to be profitable, and the value right now of GameStop is just the same as value of cash, which is insane, and I'm sure actually they are way more valuable than what is right now visible on the market. The RSI right now, so if we move a little bit to technical analysis, right? So the RSI is oversold, and or close to oversold. So it's probably close to the bottom, and might be bouncing back. So that's really these are good reasons actually for me to enter. And then there is this element of premium, right? And I was showing this last week. And if you compare premium from Tesla, for example, and which is volatile as well. I mean, it's a huge company, way bigger than GameStop and so on. So the premium might be a little bit less, but it's really volatile stock. So the premium is not really bad in the end, right? So if you compare Tesla and GameStop, then for the same delta, the premium is better. And so now I have GameStop. I sold cash. I sold covered calls with the strike price of $26, and you can see that the annualized return on investment, right? If I was collecting this premium whole year, then it's 51% return on investment. For Tesla, with the strike price that I feel I feel confident, or reasonably confident, or risk of assignment is reasonably low, the premium is only 21%, right? So maybe we can try during this live stream, actually we can have a look to interactive brokers and compare for the same delta, which is delta essentially is mathematical expression of probability, how probable it is that for the given strike price the stock will be in the money, right? So let's say we will go for, so actually GameStop for the strike price of 26 and premium 22 cents, delta is 0.2. So let's just double check. So let's check for Tesla as it's open. What delta? So I would have actually 350 and 292 and 350. So it's like this, right? And for GameStop, I would have, let's go to GameStop. So I would have 25 and 0.30, right? So it would be 25, 0.30 per one stock. So see, it's 50%. It's 50% higher, right? So 33% annualized return on Tesla, and 62 annualized return on GameStop. So yeah, so you can see that I can collect actually more premium on GameStop, especially if I keep using technical analysis as well, so that so that I manage the levels somehow, or the strike price somehow as close to the current price as possible, so that I maximize the premium. You can see basically that the return from GameStop is really nice, and is way better than the return from other stocks. So that's another reason why I have GameStop, and yeah, and I really am happy I can collect the premium, and then reinvest the premium to the stocks that I like, or to purchase more puts. All right, so this was for GameStop. Now let's go to for GameStop. Actually, hold on. I wanted to just part of my process is also look at the news. I don't expect any major news right now for GameStop. GameStop just raised over 2 billions. So yeah, as I was saying, right, they raised the money, and they from before they had also a lot of cash. So right now they have close to 10 billions in their balance sheet, and it's just insane. I really believe Ryan Cohen that he can invest those money smartly and make GameStop very profitable company. All right, so but for this week I don't expect any major news that would really push the price up. And for GameStop, it is super interesting and super important actually to see the options, right? Because the options and option chain is something that drives the price up for GameStop often. And so when we look at the open interest, we see that this month actually is high activity of options. But when you look into the detail, you will see basically that most of the calls are actually with this strike price of $125, which is really far away. And so then we need to be concerned about the options close to our current price, right? So then there is some with the strike price of 23, then potentially some with the strike price of 25, but it doesn't seem like options ramp up, right? So that it will actually drive the price really up a lot, and so therefore I can feel comfortable with the strike price of $26, and which is above two resistance levels. All right, so this was for GameStop, and now let's go to Nvidia. I am selling puts to cover to cash secured puts with the strike price of $130, and I will actually show you one thing. So for Nvidia, you can see actually that with the strike price of 130, the premium is only 31 cents, right? So it's only 31 cents, but I'm planning for 61 cents. And so the reason for this is basically I expect Nvidia is cooling off a little, right? So there was this major resistance in 144 or within 144 to 145 level, and it didn't push through the resistance. It was trying for maybe, I don't know, even here, right? So 1, 2, 3, 4, 5 times, maybe even here, 6 times in the past 2 weeks, an attempt to actually push through. It didn't work, and so I expect actually the price going down. And so as the price will be going down, the premium of the puts will be going up, right? So even though the premium for strike price of 130 is right now at the half of what I'm planning for, or what my order is set for, I expect that as the price will be dropping, will be moving down, the puts might be, or the orders might be executed, and I will be getting the premium, and potentially I might even get assigned. So for price of 130, it would not be very bad, right? So there is this support level around 120, 23. So I would be positioned quite nicely actually for another attempt to grow. I mean, if there is a chance that the price will fall even further and towards $90 or towards $100, unless there is some major factor in macro or something around tariffs and so on, but maybe even tariffs will not might not impact Nvidia so much. So yeah, so this is, if you look what is happening with the stock, I think the order for 130 is and higher price than is that we can see right now is actually a reasonable thing to do. All right, so now let's go to, so we covered GameStop, we covered Nvidia. Now let's go to Tesla. And again, for Tesla, there is this. So Tesla was, and I was saying this last week as well, right? That Tesla might grow and potentially maybe dip a little and retest this 275. It's something really that might happen this week potentially. It's it seems it's going a little bit down. I mean, it's neutral in the RSI, so it might go actually both directions, but overall I don't think I'm selling covered calls. I'm selling covered calls for $365. I think the chance that it will go over is very little because no major news are expected. We will look at the options as well, but there is nothing major, and this the resistance level is quite far away. If we, I mean, let's try this, right? So right now the price is 325. If we have buffer 15%, so actually it's here, right? The difference between the strike and the current price. So 12%. It's above the resistance, so I'm quite comfortable actually with this price. Or with this strike price. Let's see if we will react to the market, right? If it does something against my direction, then I will either roll or I will buy back. I mean, let's see how this works out. But this is the plan right now. If I look at the option open interest, and right, so for the calls for this week, strike price 330, then 337, then 347. This is far below what I said as a strike price, right? And so then it's just few options, so I don't expect any like option chain roundup. So that's good. And then we can also check, like if there is some exceptional volume in this week. Yeah, the volume is quite high actually. Is very high, but the prices are obviously not very. Yeah, the prices are below the strike price, right? So then there is something around 400 reasonable volume, but there is this gap which will not allow for the price to grow too much just because of the options. All right, so therefore covered calls planned 365 strike price, which means this premium, so the premium is $1.35, right? If sold, and so therefore it would be annualized return on my investment from premium 21%, compared to what is for Gamestop, right? Gamestop 51%. So yeah, it's aligned with what I was saying before. Now let's go to interactive brokers again and check. So Gamestop we talk about, Nvidia we talk about, Tesla we talk about, and so now last one is Cleveland Cliffs. Yeah, Cleveland Cliffs. I set the strike price for $8.50. Let's see what this stock will do. I mean, there is this support level around 690. Again, RSI somewhere in the middle. I mean, this is my it's very small position. It's an attempt to to see if the tariffs and if the steel industry actually can bounce back. So this is longer term view, right? So it is really it's trading really miserably. So it's just going down. So maybe here it's some bottom. Hopefully it's finding its bottom. And if not, then it's learning, right? So if this is not playing as I was expecting, then at least I can learn something from it. It's good. All right. So this is what I have planned. Overall, I plan for $570 in premium for next week, which is annualized return on investment 38%, which is very nice. It's above my target of 30% on premiums, and it brings me to over 6,000 overall in 12 weeks. Again, annualized return overall in 12 weeks 34%. It's really nice. It's really nice performance as of now. I keep the money and I will reinvest the money, so it's compounding, right? So I will be earning even more. Really looking forward for this week. I hope it will play nicely again as the last week, And please let me know in the comments if you are selling options for premium as well. Let me know which stocks you are going for, and see you next week, latest at on Sunday at the live session again, when I will be planning trades for Monday. And yeah, maybe during the week I will join again and we'll review the positions and we will react to the market situation. Right, cheers.